I'm going to talk about, okay, this is a psychology course. I had to put in my best talking about psychology in trading because that's the most uh, underrated part of trading by beginners, and that is the most important part of trading. 20% is everything you have to do with your technicals, while 80% is psychology, how you react to the market, how you react to your own strategy, how you react to how the market treats you. Because there is one thing I found out that really changed the game for me. Initially, I normally thought that profitable or successful traders have everything figured out. Like, they don't lose, they don't encounter bad market conditions, they just win back to back, or maybe they lose once in a while. I never knew that the same thing I was experiencing, break even, losses, some kind of stupid market conditions, they experience same, but they know how to manage their actions when in the market. They know when to trade, when not to trade. They know when to take lower risk than usual. They know everything they should put together that makes them profitable. One of my biggest fear in trading was, if I could pursue the trading career and it turns out to be a career that one day you could make millions of dollars and you lose it also in one day. You could make millions of dollars in years and you then lose it in one day. I thought that was what trading was. So I was like, what's the point? But when I found out that nobody got to be successful in trading luckily, nobody got there by just just funding accounts, over risking their way to the top. Nobody got there without understanding risk management. This was when I understood the game. This was when I knew that before you can ever be successful in trading, you have to be A1 in psychology, A1 in your strategy, like you have mastered your strategy to the fullest, and also A1 in risk management. These three things are the core things that you have to be excellent in before you ever become successful. So if you're excellent in these and you're already successful, it's very difficult or it's very hard for that successful trader to break his habit on one morning and lose, because he knows what it means, what it took him to get there. So he will never break those rules, and that's what makes him a successful trader. So when I understood this, I gave Forex my whole attention, my whole life. I knew that, okay, this shit is something I can do for life. It's a rewarding career. So this is a psychology course I'm teaching on YouTube for free. So let's get right into the video, and you're going to learn a whole lot. I'm going to segment everything into 7 different categories so that you can understand step by step how to have the best psychology while trading the financial markets. Okay, let's get to it. Okay, the first one is building a system and routine. So that's the first part we have to look into. This is trading psychology. This involves your behavior concerning everything that pertains to trading. Okay, so building a system and routine involves having a foundation, building series of instructions, rules, patterns that you trade with. So I'm a smart money trader working with ICT's 2022 model. Okay, so this is it. I have certain things I look for when I'm trading. I have a certain pair I look at. I have a certain pair I look at. I have a special time I come to the markets. I don't jump in the market just anytime. I have a special time I come to the markets, and I also have a special pair I trade. No matter how it treats me, I stick to the pair. And also, I have special setups I look for. So I'm not just coming to trade what I feel like, or when I come and see the markets act, I just follow suit. No, I know the setups I look for. I try to trade a particular setup repeatedly. So that is where you have to put your ass to work. You have to put your ass down and learn a strategy. Now, you must not learn smart money. You could learn price action. You could learn Wyckoff. You could learn any kind of trading strategy you want. If you want to learn how I trade exactly, I'm going to put the link of how I trade at the end screen of this video. Okay, so you just watch to the end and see the video I made on how I trade step to step. Okay, so I've done some breakdowns recently with that strategy, trading GBP USD. I've done some breakdown in it on Nasdaq, on Euro USD, in this channel also. You can check my videos, right? But if you want to learn a strategy, you have to choose a particular mentor, someone. If you want to learn my strategy and watch me mentor you from scratch to you become a professional trader, you click on the link on the description, Telegram link that shows private mentorship. When you click on that, it's going to refer you to my Telegram bot. From there, you follow the instructions, because you need a mentor. You don't need to learn from A, B, C, D. If you try to learn from A, B, C, D, you get yourself too complicated. You get so complicated knowledge that you at some point you feel like just quitting. Okay, so you need one mentor. You need one style of trading. Now, that style of trading will involve when you come to the market every single day, what pairs you trade. It could be 1, it could be 2, it could be 5. But I usually advise let it not be more than 5 for maximum focus. What kind of setups you look for? Is it price action based? I'm talking about retail price action. Is it smart money concept based? Is it indicator based? Is it any strategy at all? I believe every strategy works, but some strategies have a higher win rate than others. That's what I believe. I believe every trading strategy works, but some strategies have higher win rates than others. Some of them work in a particular quarter of the year more than some other quarters. Yes, some work in a particular month than the others, right? Just know that there is no strategy with a 100% win rate. There's no strategy that you win all the time. You must lose. You must have break-even trades. It's completely normal. So when you have learned from a mentor and you have put your trading routine and system in check, you know the strategy you work with and everything, then you have done the first part of your job. Okay? Alright, so what's next? Losing streaks are inevitable. Accept them. So when you hear losing streaks are inevitable, for a long time I've been thinking that when you lose 2-3 times in a row, 4 times in a row, 5 times in a row, you're a bad trader. Something is wrong. You're actually missing out, or you're doing something wrong. Something is wrong. Everyone is winning. You're the only one losing. Successful traders do not lose 2, do not lose 3, 4, 5. It's very wrong. That's what I normally think. Now, losing streaks are completely normal. You can lose 3 times, 2 times, 5, 6, 7, 8, 9, 10 in a row, and it's nothing wrong. Now, when it's nothing wrong, it's when you are working with a system you have built. You are working with a back-tested system, meaning you built a system not by... I don't advise people to build a system by themselves. I advise people to learn from other people that have built a successful system that have been tested over years. That's why the system I'm working with was originally built by Inner Circle Trader ICT. I did not add nothing to it. I'm using it the same way he taught it, right? So why over the year I struggled with systems I wrote by myself, and I found out that they do not work for a long time. Meaning they work 2-3 months, 1 month, stops working. Why is this so? Because I built these things by myself in a particular market condition, and based on the fact that TradingView subscription cannot really go back in time, because trading smart money concepts, our entries are mostly 1 minute, 3 minutes, so I cannot really backtest like past years. So what I can backtest can just be 3 months, 4, 5 months before now, highest 5 months. So this thing might show up working really good in this 5 months, 5 months before now. And then what happens when I start trading this in live? It works 1-2 months for me and stop working and start giving me issues. poor win rate and all of that stuff. So I just found out, okay, I should be able to work 100% with what people have used for years. So if you're working with price action, you can decide to take a course or join a mentor or do what others have been doing and have been proven to be successful for years. So when you do this, you have to back test. You have to sit your ass down and do a back test. When you back test this trading strategy and then you see that, oh, this strategy is working, this strategy is giving you what you want, then you can go and forward test it on a demo. For a while, you have to set goals. I made a video about this explaining, and the video is in this channel, and the video says, is it time, how to know when it's time to start trading live accounts and all that. I spoke at length about how to know when you're really ready, because the whole social media hype, the whole hype about making money off this, making money off that, all these hypes are not reasonable. All these hype are unrealistic. It's not true. Forex is not a get rich quick scheme. You can't just over risk your way to the top. It's a lie. You have to understand how this game works and attain some level of consistency before you start doing all those with your money. Okay, so talking about losing streaks, when you backtest the strategy you have gotten or you have learned, you have to see how far the strategy performed, how good it is, how many losing streaks you can get in this. Because when you're backtesting a strategy and you see 2, 3 losses, 4 losses in a row, it's normal. It's completely normal. Okay, so backtesting shows you how many times you can lose in a row. Backtesting shows you if it's 3 times as a regular losing streak for you, if it's 6, if it's 7, if it's 8, if it's 9. When you see that kind of scenario, you write it down, you document it, you journal it. So when you journal, the journaling software I like using is Google Sheets. You get Google Sheets. If you're using your computer, you can download the Chrome browser, and on the home page of the Chrome browser, you just, by the right top corner, when you click on Google Apps, you find every app that Google, or every site that is sponsored by Google. So you see Google Sheets amongst them, and you open it. And I normally use it for recording or journaling my trades, performance, backtest, and all of that, right? Okay, so this is what you have to do. So when you find out that, okay, backtest, this is how many losses I can get in a row. When you're forward testing or when you're trading live, when this thing come real life, you know that, oh, this is normal. I've seen it in backtest. You can, I lost 6 times in a row, 7 times in a row. So this whole thing gives you more confidence in that, okay, I've lost 7 times. Okay, this is like I'm experiencing this. So what you have to be sure of is, as long as you are taking trades off the same rules that you took while you were backtesting, you're following the rules, you're following the trading plan, you're not making mistakes, you're not doing wrong thing, whenever those losing streaks come, it's normal. All right, it's normal. What's not normal is when you're making mistakes, you're revenging, you're doing all sorts of bad habits. Those losing streaks are not from the strategy's fault. It's your own fault. So tough psychology is that in trading is that you should accept that losing streaks happen. So when they happen, 1 trade loss, okay, normal, 2, wow, 3, 4. So if it's way far more than what you've backtested, if you've backtested that 4 losing streak is what happens most of the time, and then you see 12, that's when you can go back and check what's happening. You can take a break and check what's happening. Okay, so but as long as it's normal with what you see in your backtest, if 9 losses in a row is normal in your backtest, like it doesn't come like often, but if let's say it comes once in 3 months, if you have seen such, if you see it's real life, you can just chill till when that 9 is over. If it continues, then you can know that, okay, something is wrong, I have to check back at something. Okay, so that's what you need to know. These are the things you need to know. Now, one thing about losing streak is losing streak can help you understand how much you can be risking in a prop firm. You want to buy a prop account, and you know that, okay, 12% drawdown is the max drawdown. So the highest losing streak that can happen to me is 4 losses in a row rather. So I must know how much I'm risking per trade, so that if that 4 losses in a row happen coincidentally, I will not lose this challenge. So this helps you to understand your trading risk and everything. So losing streaks are normal. They will happen. It doesn't mean you're a bad trader. Every other trader you see online, they lose, and when they lose, they don't tell you. They only tell you when they flip accounts. They don't tell you when they tried flipping and when it blew. They tell you when they flip account. They tell you when they make huge money. They tell you when they pass profit. Remember, on social media, people want to show you what they want you to see. So the next one, removing fear and reckless trading. Fear in trading is something very common amongst new traders, even intermediate traders. Some traders into trading for like 2-3 years still experience fear sometimes. Where does fear come from? Now, fear comes from the fact that you must have experienced a losing streak. You must have experienced some crazy situations, and it makes you scared of taking the next trade. When you want to pull the trigger, you just feel so scared, and sometimes you don't take the trade. You just watch everything play out, and then you get frustrated and regrets after. Now, how to fix this is this. After backtesting your setups, your strategy, backtesting, journaling and everything, on the chart you have to behave like a robot. Stop thinking about money. What leads to fear and reckless trading is when you're thinking about money. Oh, I don't want to lose. No. That's why I said work with demo for a while before you go to a live account. Forward test what you've learned on demo. Why? Now listen good. Why it's good to forward test on demo, the way Inner Circle Trader ICT will always teach you guys, is this. Demo, you are more likely to be calm and see things more logically. So when you try to master seeing these things logically, trying to master the strategy, it will be easier for you to replicate the same thing in a live account. So if you're just coming into a live account when you've not really mastered your strategy, you just jump into a live account, no matter how, even if you have been winning, sometimes fear can still come out because of doubt. You can still have some issues of reckless trading. Okay, when I mean reckless trading, trying to over risk now because you're involving the money factor, trying to under risk, or trying to do all sorts of things because you're praying not to lose money. But the right approach to trading is that you should keep money aside and focus on getting very good, very fluent at executing your trades. When you see your setup that you like, you execute regardless. You don't care what happens after. You have a rule. I'm trading twice a day during my trading session, and it must not be more than twice. I just need to execute twice a day, and it must not be more than twice. When you put that rule, you act like a robot. When your setup show up, you execute. If it works out, you're done. If your setup show up, you execute. If it doesn't work out, you wait for a second entry. Now, the second time you're trading, you're not trying to trade immediately you hit your stop loss. That's revenge trading. You're trying to wait if your strategy, if your setup will appear again. You on your back test know how many trials or how many times your setup can show up in a trading session. If it shows up and shows that okay, it's ready to move in that direction, what happened? You actually go back and execute again. So you have to keep money aside. What you should be focused on is how correct did I execute my trade? That should be your goal. How correct am I today? What I mean, how correct? Based on my trading strategy, based on my rules. Did I fail any rule today? If you fail any rule today, it means you traded very badly today. Okay? If you passed any rule, like if you kept to any rule, then you traded correctly. Okay? So your goal is to make sure that every trade you take, you followed your rules completely. Your goal is to make sure every trade you take, you follow what? Your rules completely. That's your goal. That's your optimum aim. That every trade you take, you're not thinking about whether it's a win. You're not thinking about if it's a loss. You want to just take it correctly. Now, if you keep replicating this day after day, you find out that out of 10,000 trades, you're profitable. As long as your strategy backtested has a good win rate, at least from 60% and above. Okay, so the next is too much knowledge is poison. There was a time in my trading when I was looking up too much content in my trading. That was late 2020. I was frustrated. I wanted my trading to work so bad. So I remember watching Rocks FX Academy on YouTube, watching so many channels, learning this, learning that, learning break and retest, learning blah blah blah. I learned so many things at the moment. Even up to 2021, I was still learning so many things. 2021, I was learning price action. From price action, I jumped into SMC, supply and demand. I jumped Wyckoff. I jumped so many things in this head. I came to realize that I couldn't even use all of them. I couldn't even harmonize all of them in my trading. Because in trading, there are so many things, so many trading strategies, so many trading rules, so many trading patterns in the world. So if you try to learn everything, A, B, C, D, E, what happens to you? You get confused. You get frustrated at some point. When you look at the chart, you're seeing just too many things. In trading, you don't need much. You just need to learn one way of trading. That's why they say stick to one mentor. You don't need to learn from A, B, C, D. No, stick to just one mentor. Learn how he does his shit. Copy him wholesomely. Make sure you're taking the same trades as him. So based on this, when you follow a particular mentor, following mentors on YouTube is not bad, but you will suffer because you don't know the trades they are taking. You don't even know when you're entering the market. You're not trading with them. You're just taking that free content on YouTube. And most YouTubers do not put in all their best. They don't show you. They are secretive. They hide the core things from you and just give it to their paid students. So it's more reasonable you save up money and buy a mentorship from someone you know is doing very well and knows what he's doing. How to know a trader and knows what he's doing? From his free content, you can see if this trader has good trading habits. I'm talking about traders that are paying trading like it's a get-rich-quick scheme. Traders that actually show you that they know what they are doing. They make their analysis, they are transparent about it. Not traders that are shady. No live trading, no analysis. They just come and be posting screenshot of MT5 blue every day. No, that's not what I'm talking. That's shady. I'm talking about traders that are transparent. If you go on my Telegram channel in the description, you see that I basically post my markups every single day on my free channel. I post breakdown on this YouTube, on my Telegram channel. Sometimes I post link for New York live trading because I trade New York session. Okay, so I post these links and I'm very transparent at it, because if you are doubting it, you see me do it live. So these are the kind of mentors you should focus on, because they show you that okay, they know what they are doing. So when you get those mentors, focus on just what they are doing. You don't need too much garbage. In trading, if you know too much, you start losing, you start making mistakes, you start experiencing bad, because the market is not traded in a particular way. Almost every strategy works, like I said before. It's just that some have higher win rate than others, but almost every strategy works because the market does so many things. Okay, you could buy 5 minutes ago and win the trade, and me I sell right now and still win the trade with different approach, complete different approach in the market, and still be successful. Okay, so the next is risk management. What is risk management? This is the act of what? Using calculated risk in trading. Meaning you cannot over risk your way to the top. Risk management does not involve using of lot sizes. Okay, I'm going to add this also at the end of my screen. There's a video I did for risk management that taught how to calculate your risk using certain formulas. It's on my channel. Okay, that's how to fix your risk management problems. I gave formulas for every pair indexed on how to calculate how much you're risking per trade. Now in trading, you have to know what you lose when you trade. It's going to give you so much more confidence. It's going to make you more relaxed. You'll be expecting what you're going to lose. Example, the different feeling you feel is, let's say you have a $1,000 account and then you enter a trade and you don't know how much you will lose when you hit stop loss. So then it's in your drawdown and you're seeing figures that are big and you're really scared. Your heart is pounding. You're begging. You're praying, God, please let this go back up. No. If you're in a situation whereby you're praying let your trade go back up, it means your psychology is really, really rubbish. Psychology is bad. You have to work on it, because if you're in that situation, it means you took a bad trading decision. It means you traded wrongly. You did not calculate your risk. You just went in because you believe the market will go in your direction. Who are you? Why do you think it will go in your direction? Who are you to the markets? So you should know that you have to calculate your risk each time you're going. So let's say you enter the trade with a $1,000 account and you're in drawdown and it's showing minus $400. But me, I purposely risk $50 for that trade out of my $1,000. So I know that no matter how the trade plays out, if it's worst come to worst, I lose $50. Simple. That will give me so much confidence because I know how much I'm already going to lose. So you should work on your risk management, and you should know that every setup or every trading opportunity that comes your way based on your strategy is not going to work out all the time. You have to accept that some of them will just fail. So you have to focus on a consistent risk pattern. If you're risking 1%, keep up that. If you're risking 2%, but I always advise beginners to risk 1%. If you start seeing some level of consistency, you cannot raise your risk. Don't raise it when you're not sure of your consistency. Don't raise it when you've not seen months of consistency. Focus on the craft, the money will come. So you have to risk what you can afford to lose. You have to risk what, if you lose it, it doesn't touch you. If everyone is saying 1% and you're not okay with 1%, go ahead and risk 0.5, 0.2, 0.1 is nobody's business. It's your own account. It all boils down to you not focus on the money, because you might say, oh, if I risk 0.5%, I will make really small. Ask yourself, are you sure of making any money? Are you sure of consistency at the moment? Or you want to just follow everybody because they're risking 1% and risk what you can't afford to lose? Because whatever you do in your trading that causes disaster for you in a trading day, it affects you in the next trading day. It brings fear, it brings insecurity, it brings doubt. You start doubting your strategy. Before you know, you leave your strategy, you jump to another one. You leave your mentor, you jump to another one. So you should focus on what's best and what is important. Okay? So the next is consistency start from you. So you hear people often saying, I'm consistently profitable, I have been consistently profitable since. So yeah, when someone is consistently profitable, it means a person is consistently making profits, making profits back to back every month. At the month it closes on a blue, profitable. Every month, blue, regardless of wins, losses. Now remember, in a month, there could be losses, losing streak, win streak, everything mixed together, because like I told you, losing streak is guaranteed, win streak is also guaranteed. So at the end of the month, you keep making money back to back. That's consistent profitability in the markets. Okay, so the word consistent profitability starts with you. Are you consistent in what you do? First of all, for you to achieve consistent results, you have to be consistent in trading your system. No matter what shows up, you have to execute. Even if you lost 3 days ago, you execute your same back-tested system that has shown you its effectiveness in the stats, in the results. That's why you have to journal all what you get from your back test. You have to write them down. So what you do is you have to watch, you have to watch your trading closely. Come to the market every single day. It should be your priority. Even if you are working a job, whatever, arrange your timing, because trading is going to make you free financially. So you have to give it your priority, your every, right? So you consistent with when you come to the market, with how you trade, meaning you must follow your setups consistently. And also you must be consistent with your risk management. You keep on risking a particular amount every single time you trade. This is going to help your account grow and not make it dance. Today it's 300% in profit, tomorrow it's almost getting was almost 70% down. Okay, so you need to make sure you're consistent with your attitude towards your trading account. So when you keep doing that same thing, as long as your strategy has proven itself, you keep doing the same thing, over time you'll find out that you are profitable and your my FX book stats is growing. It's growing. That's what you need to see. It's growing. You're watching it grow. That is it. Many people do not see consistency. They see consistency as you just going to learn the best strategy in the world, and then boom, you start making money back to back. No, it doesn't work that way. There is no best strategy. There's no strategy that gives you even 90% accuracy. There's no best strategy, not even one. And you're not going to start becoming successful in trading just from one morning. It's something that shows up slowly, as long as you're consistently doing the same thing over and over again. Try to trade one particular trading system for like 1 year and see your performance. Keeping anything about money aside, forgetting about money and focusing on the skill set, and you'll get the results. So the last one is psychology involving prop trading. So it's flying everywhere. Prop firm. Every trader wants to level up and get a prop firm account. So there is this pressure attached to prop firm. People that have never been funded before feel like they are the worst traders on earth, or people that have not passed the challenge feel like they are the worst traders on earth, or people that had an account before but lost the account feel that like the worst. Now, prop firm shouldn't be a true test of you being profitable or not. Successful traders still lose prop firms. Traders that have been trading for years still lose prop firms. Meaning, you can get prop firm and you're in a bad trading week or weeks or months, and then you lose the account. It's completely possible and not a big deal. So you not passing a prop firm doesn't mean you're a worse trader. What you should make sure is that your back-tested strategy can make more than like 10% or more every month. If your back-tested strategy can make 10% or more every month, you know that this system can pass prop firm based on the statistics it has shown you. So you don't have to worry. Some months can be funny, some quarters can be funny. You know that like December time is not really a good time to take challenges. So you could take a successful trader that his system does not work really good in December can take a prop firm and then lose it. Doesn't mean he's a bad trader. No. Doesn't mean he doesn't know what he's doing. No. It's just that it's not a good trading time. So there's a psychology around prop firm. When you're buying a prop firm account, treat it like you're taking a trade. Meaning you know that, okay, this trade could go well. It could also go south. If it goes south, yes, I lose $50. No biggie. If it goes well, okay, I make 100, I make 150, I make 200. Okay. That's good. You're not too excited over wins and you're not too sad over losses, because those things will keep coming for the rest of your life. Why are you too excited over wins? You keep seeing these blues till you die. As long as you keep trading. You keep seeing these reds till you die, as long as you keep trading. So none of them should freak you out. They come. If you lose a prop firm account, take it as when you buy a prop firm, first of all, don't tell yourself, I must pass this. I believe in myself. I've been doing this. My friends did this. I know myself. No, don't do that. It's just like saying you must win a trade. You must win a trade. No, don't do that. What you should do is, I'm buying a prop firm. Well, I could win, I could lose. So you don't go telling your friends, broadcasting it, telling your family, oh, I bought a prop firm. No, don't do that. Because it will make you apply too much pressure on yourself and expect too much from the markets. And this could destroy your psychology and make you even lose it faster than you think. So just buy the prop firm and take it like, it could go anyway, but I'll just trade my strategy. I'll just stick to what I know. So when you're buying prop firm, if you want to purchase a prop firm and you know, okay, this is my last money, I'm using everything I have, then it means you're doing something wrong. It's just like risking everything you have in your trading accounts to trade. Using all the money you have in your bank account to buy a prop firm is like risking everything you have in your trading account for one trade. You don't do that. You must make sure any money you're risking to buy a prop firm account is the money you're willing to let go. If you know you have the money you're with is your last money you want to use to purchase a prop firm, divide the money into two, keep half in your account and fund half in your live account. Try to double that money in your live account. If you can't double that money in your live account, then you're not even ready to buy a prop firm, meaning you will lose that prop firm. Try to double your live account first. So buying prop firm should be something that it should be a money that is not touching you anyway. Like you're not feeling it if you're withdrawing this money from your account to buy that prop firm. So when you buy, your expectations is too minimal. Anything could happen. But what you do is, you know the rules. Most prop firms, 12% max drawdown, 5% daily drawdown, and 8% or 10% profit targets for in 30 days evaluation phase 1. That's MFF. FTMO same. So you want to trade it, you want to completely trade your strategy and risk 1% per trade. Max trading twice a day. So no matter what happens a day, you know you're not close to daily drawdown limits. You just lose 2%. So you keep trading till when you pass it, fine, move to evaluation 2. Not big. Even when you get funded, you know you're still with these rules. Don't feel like you've arrived or you've done too big thing. You can still lose the account. So you should focus on still trading your strategy. When you get payouts, you put that money into live account. When you get payouts, you put that money into live account. You keep doing this thing over and over again. This is how you succeed in the markets. Okay? So you just have to work on yourself and know what you're looking for, and you'll get the best for yourself in trading. So this is the last piece I'm going to give to you guys watching this course. You cannot be successful in trading without getting your psychology intact. You have to work on your psychology. Watch this video over and over again. Make sure you take down notes and apply it to your trading, and you will see that you will see so much results in your trading. Okay, if you have some questions to ask, put it in the comment section. Like this video and subscribe to this channel for more educational content like this. Peace out.